Thank you for joining me. I'm Alex, and I would like to talk to you about iRobot. And let's first go over the stats and then talk about why I wanted to talk to you about it. So, what they do is they build robot vacuums. Basically, the Roomba is what they build. So, they build little vacuums that run around your house while you're not there, or, while you're laying down or whatever. So, they clean while you sleep, which is a great concept and a great growth strategy, especially when the prices come down because of the mass production of things. So, current price is $54, and the market cap is $1.5 billion, which means the market cap of the biggest manufacturer of robot vacuums is still fairly tiny. And as I said, they have a lot of room for growth there. Dividend is 0 because they're not that old, even though they've been in the store for a couple years now. Probably almost a decade, I would say. Current revenue $1 billion, which is up 15%. Current earnings $88 million, which is up 75%, which gives them a PE of 18, which certainly doesn't sound bad. Total assets $767 million. Total liabilities $232 million, which gives them a total stockholders' equity of $535 million. So now why I wanted to talk to you about them is after hours, the stock dropped about 20%. After it dropped 3% during market hours. So currently the stock trades around $43. Which is why I wanted to talk to you about it. And I don't really do after hours prices because much can change before the market opens, and a lot of stocks that go down hard after hours already go up before the market even opens and before you can even buy it at the price that it dropped to. So, the stock dropped because they announced earnings, which crushed expectations, but the guidance for the rest of the year is lower than it was supposed to be, which means that they think they're going to get hit pretty hard by the tariffs that are on their vacuums, which are imported from China. So the full year guidance is down, and the fourth quarter guidance is down, despite all the good signs to people actually wanting to buy their products in the holiday season. So the guidance does not necessarily mean a whole lot, but obviously that's a bad thing, and the analysts think it's a bad thing, and people will just sell the stock because they were expecting better numbers in the forecast, which is obviously just a forecast, so it doesn't actually tell you much. So on the whole, I think that the stock is pretty attractive right now, and the stock, if you can get it for $43 instead of $54, is a very attractive stock. So I think that the PE looks good, the balance sheet looks okay, the revenue is growing at pretty good pace despite the challenges of the tariffs that are already on them. The earnings are amazing, obviously. And so if you're looking to buy into very small market cap companies, I think that iRobot might be a good, speculative stock to invest in. If you're looking for big companies that pay dividends and stuff like that, obviously that's not it. And obviously, since they don't pay dividend, and they won't pay dividend for a long time, if you're looking for dividends, this is not going to be the stock for you. If you're looking for growth, I think that if you buy the stock now, in the next couple of years, there won't be a whole lot of growth. But after the tariffs are back off, I think that the revenue and the earnings and the market price will go up significantly. So I think that, especially if you can get it at $43, which is where it's trading at right now, I think it's a good stock to buy right now. And I think that it's a fairly good stock to buy short term. Now, long-term risk factors include other companies getting into the business, which has already happened, but not really on a big scale. But once Chinese companies figure out how to mass produce their product for a vastly lower price, I think that that's a fairly big risk. Obviously, there's a lot of challenges to, AI and how to make it move to where it needs to go without, killing itself. So I think that long term, there's many challenges that other companies might figure out. But in the near term, I don't think anyone's on the same level as iRobot. So I think that for the next 2 to 5 years, I think it's a fairly safe company to invest in. So with that said, if you're looking for dividends, this is not the stock for you. But if you're looking for growth, I think this is not the highest growth stock that you can buy into, but it's definitely up there, and I think they have a lot of potential for growth. And if you're looking for value stock, then I think the PE, the balance sheet, and the earnings growth really make this a good stock for a value investor right now. Obviously, there's challenges. It's not the safest stock, but the balance sheet looks okay. So I think that even for a value investor, it's a good stock to look into. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.